Welcome back to Investing Talk Podcast.
Today we're looking at Novo Nordisk. The big question is it a good time to buy now?
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want to look into, leave it in the comments below.
So let's get into the analysis.
Okay, Novo Nordisk. I mean, the numbers are just staggering lately. Revenue reached DKK 290.4 billion in 2024.
Yeah, that's about, 25% growth year over year? It's huge.
Exactly. And net earnings also jumped up over 20%. Really strong fundamentals.
But here's the interesting part, right? The valuation. You look at the trailing PE ratio, it's around 12.50.
Mm-hmm.
And the forward PE isn't much higher, maybe 13.15.
Which seems low.
Yeah.
For that kind of growth, you'd expect something much higher.
Precisely. It suggests the market maybe hasn't fully bought into this growth story continuing at this pace, or maybe they're pricing in some serious risks down the road.
So what's driving that incredible growth? It's got to be the diabetes and obesity drugs.
Absolutely. They really dominate that space. Think about their GLP-1 franchise, Ozempic, Saxenda, and now Wegovy. They practically created the modern obesity treatment market.
Right. That's a powerful position. Is that their main competitive advantage, that first mover status?
It's a huge part of it. They have the established clinical data, years of patient use, but it's more than just the drugs themselves.
What else then?
It's the moat they've built. Primarily, it's manufacturing. These GLP-1 drugs are complex peptides, incredibly difficult to produce at scale.
So it's not just having the patent, it's actually being able to make enough of the stuff reliably.
Exactly. Building that kind of specialized, large-scale manufacturing capacity takes years and massive investment. It's a huge barrier to entry for competitors.
Okay, that makes sense. And financially, they seem solid beyond just growth.
Oh, yeah. They generate substantial cash flow from these products. And they offer a dividend yield, too, around 2.51%, which is pretty decent for a company growing this fast.
All right, so fundamentals look great, strong moat. But the stock price tells a different story recently.
It does. That's where the potential opportunity or maybe the warning sign comes in. The stock's trading around, USD 49.46.
Yeah, much closer to its 52-week low of about $45 than the high, which was way up over $112. That's a big drop.
A really significant pullback. And it's underperformed the market recently, too.
Right. The numbers show it lagged the S&P 500 by 11% over the past month, down about 7.4% overall.
So why the weakness? The thinking is it's largely tied to concerns about future earnings revisions. Maybe some profit-taking, too, after the big run-up.
So maybe a temporary blip? Is that what the market's sensing?
That's the bull case argument, that this dip is positioning the stock for a really compelling reentry. Plus, it has a low beta, 0.33.
Meaning it's typically less volatile than the overall market, which makes this recent sharp drop even more notable.
Correct. It suggests this move might be an overreaction to those future growth concerns.
And the analysts seem to agree it's an opportunity, right? The consensus is still pretty positive.
Very positive, actually. You've got a consensus buy rating from 10 analysts covering it.
And a high percentage are sticking with bullish calls.
Yeah, 80% are maintaining either strong buy or buy ratings. They haven't bailed despite the price action.
What kind of upside are they seeing?
The average 12-month price target is around USD 80.40.
Wow. Okay, from the current $49 level, that implies, over 60% upside?
About 63.7%, yeah. So analysts clearly believe the recent sell-off is overdone and the fundamental story remains intact.
Okay, this all seems to be building towards a key moment. There's an event coming up very soon.
Yes, the big one. The Q3 2025 earnings report. It's scheduled for November 5th.
So just a day away as we record this, that's going to be critical.
Absolutely critical. It's not just about the Q3 numbers themselves, but what they signal for the future.
If you're an investor, what specifically should you be listening for in that report and the call?
Number one, growth rates in the obesity care segment. How are Wegovy and Saxenda performing? Are they still accelerating or starting to plateau?
Okay, obesity growth rates. What else?
Number two, management's commentary on competition. How are they addressing the threat from Eli Lilly and others? Do they sound confident or concerned?
Makes sense. And the third?
Crucially, number three, forward guidance. Specifically, any updates or revisions to their outlook for 2026 and 2027.
Because the recent stock weakness is supposedly tied to worries about those future years' earnings.
Exactly. That's what the market is nervous about. So management needs to reassure investors that the long-term growth trajectory is still strong. Any hint of a significant downward revision could hit the stock hard.
But management hasn't just been sitting idle, right? They've made some strategic moves recently.
No, they've been quite active. There was the Wegovy label expansion.
Right, for NCAS treatment, that's metabolic liver disease.
Correct. That potentially opens up a whole new patient population beyond just weight loss, broadening its market considerably.
What else? There was something about restructuring.
Yes, a major restructuring plan. They announced targets for reducing staff by about 9,000 positions.
Wow, that's significant. What's the goal there?
Cost savings. They're aiming for DKK 8 billion, that's roughly 1.15 billion US dollars, in annualized savings by 2026. It's about protecting margins, probably anticipating future pricing pressures.
Proactive belt tightening. And they're defending their turf legally, too.
Very aggressively. They're pursuing legal action against pharmacies making compounded, sort of copycat versions of their GLP-1 drugs.
Yeah.
Protecting their market share is paramount.
And pricing. I saw notes about new initiatives there.
Yeah, they've rolled out some tactical pricing moves, things like discounts on Ozempic for cash payers, introductory offers for Wegovy. Seems like they're trying to maximize patient uptake now that some of the earlier supply constraints are easing.
So lots of moving parts operationally. Any longer-term potential catalysts to keep an eye on?
A couple of speculative ones. There's a pending FDA decision on a new oral version of semaglutide, a 25 milligram dose specifically for obesity. That could be a game changer if approved.
An oral option would certainly expand access.
Definitely. And there are also hopes for expanding Ozempic's label further, potentially for treating peripheral artery disease based on ongoing trials. Each of these could unlock significant future revenue.
Okay, that covers the bullish case and the recent moves pretty well. Let's flip it. What are the real risks? What's the core of the bearish argument that's been driving the stock down?
The number one risk driving the recent volatility comes back to those earnings revisions we talked about.
Yeah.
The declining trend in analyst expectations for 2026 and 2027.
So if that November 5th earnings call confirms a slower growth outlook,
then the stock likely faces more pressure. The current valuation, even though it looks low relative to past growth, might still be too high if future growth really decelerates sharply. That's the main fear.
and then there's the elephant in the room. Competition, specifically Eli Lilly.
Right. Eli Lilly's drug, tirzepatide, marketed as Mounjaro and Zepbound, is a major competitor. It works slightly differently, hitting two receptors, and some studies suggest it might offer even better weight loss or blood sugar control for some patients.
So a potential threat to efficacy claims and market share.
Potentially, yes. If Lilly ramps up its own manufacturing effectively and can compete strongly on price or outcomes, it could definitely eat into Novo Nordisk's dominance and pricing power. You also have compounded alternatives chipping away at the edges.
Beyond company-specific issues, any broader sector risks?
But always in pharma. Regulatory scrutiny is a constant. Given how expensive these GLP-1 drugs are and how many people could potentially use them, there's always the background risk of government intervention.
Like price controls or tougher reimbursement negotiations.
Exactly. That kind of political or regulatory pressure could cap the upside for the entire sector, not just Novo Nordisk. It's a persistent overhang for big pharma.
Okay, so weighing all of that, the strong fundamentals, the manufacturing moat, the recent pullback, the analyst conviction, but also the real risks from competition and future growth uncertainty. What's the final take? How should you think about this stock right now?
Looking at everything, the overall thesis leans bullish. We'd rate it maybe a 7.5 out of 10. The feeling is that the current weakness around $49 looks more like temporary anxiety and maybe some profit-taking rather than a fundamental breakdown.
So the market might be overplaying the fears.
It seems plausible that a lot of the concern about future growth slowing down is already reflected, or maybe over-reflected, in the current share price and that relatively low PE multiple. The risk-reward setup is pretty compelling here.
So what's the actionable idea then? Wait for the dust to settle after earnings.
Actually, the analysis suggests considering the opposite. Maybe think about initiating a small position before the November 5th report.
Really? Why take the event risk?
Because the potential post-earnings volatility could be your friend here. Whether the stock pops or drops initially after the report, view that movement as a chance to build a core long-term position.
So use the reaction, whatever it is, as an entry point for the long haul.
Exactly. If it drops on news that isn't disastrous, it could be a great buying opportunity. If it pops, it might confirm the bullish thesis. It's a tactical way to gain exposure ahead of what could be a significant re-rating while planning to hold through the inevitable ups and downs.
Okay, so the next, 48 hours around this November 5th earnings report are absolutely pivotal. It feels like a real inflection point.
It really does. We'll find out very soon whether the market's recent worries are justified or if this pullback truly represents a chance to buy into a dominant player in a massive long-term health trend at a discount. The big question hanging in the air is, can Novo Nordisk keep outmaneuvering competitors and sustain strong growth even as this market matures? That's what you'll be watching for.